Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago today. That means it's Friday. It is Friday afternoon, December 12th, basically the weekend, all but here. Ugly day in the grain markets. Livestock a little bit more mixed. We saw some pressure in the outside markets. S&P, NASDAQ, those things still trading. S&P down about 1% while we're talking. NASDAQ down close to 2%. And silver just getting walloped, down about 4.25% at the moment. Gold still trying to hold on to some positive footing, though, on that end, which I guess would be encouraging for the gold bulls. The flight to safety is certainly showing up in today's trade. Now we can kind of get into the charts. As mentioned, an ugly day. We've got March corn futures pulled up here for the day, down 5 3/4 cents, settling at 4.40 3/4. That was down 4.5 cents on the week. As you can see, we've been mostly range bound. This is something we've talked about for basically the last month, and really just kind of rounded it out in today's written commentary this morning we sent out before the open. What more is there to say about this market that hasn't been said already? We're just trading sideways. But today maybe started to change that a little bit. We broke below the low end of the recent range, still holding that 440 level, which I think is very technically significant. That's really been the lower end of the range over the last month and a half, and then you've got trend line support there. So we're kind of hanging by a thread end of the weekend. A failure to hold here into next week's trade Sunday night and Monday. Potentially that opens the door for additional technical selling pressure. But the bulls really need to see this hold, and not only hold, but really get some momentum back above the 20-day moving average, which comes in at 444. I would have thought that this week's WASDE report right here on the 9th would have been enough to propel us above the top end of the range. I had a nice close above the 200-day moving average, but just like the last time we closed above that and the time before that we closed above it, we just fell flat on our face. So the lack of follow-through on the back of good news was certainly a caution flag that maybe prompted some long liquidation and selling pressure into the weekend. But again, we're going to be at a big inflection point for the market for next week's trade, so keep a very close eye on that 440 level, which could set the tone really for the rest of the year. Now we'll jump over to the soybean market. Obviously, this is the textbook head and shoulders that everybody has been talking about for the last several weeks, and that certainly has played out well over this week's trade as well. We tested and held this breakout point, which was prior resistance in February, May, June, August, and then the breakout point in October. We tested and held that 1081 to 1086, almost to a T on the first test, but really couldn't get much more relief. So that dead cat bounce or relief rally was short-lived, and then we took out those lows from earlier in the week in today's trade, which really opens the door for some additional downside pressure going into next week's trade, with everybody and their dog looking at that gap from October 27th. That comes in the mid 1060s. So an ugly day again today for soybeans. That was down 16 3/4 cents on the session, 1076 3/4 settlement there. That was 29.5 cents lower on the week. So again, potentially more downside to that gap. I would imagine, again, just like that 1081 to 1086, I would imagine that gap would probably be a good spot to hold on the first test, but you want to see more than just a 10 or 15 cent relief rally from that. You want to see some sustained momentum and real bargain buying showing up, something that obviously hasn't been present over the last couple of weeks. I would note that we are kind of back close, getting to those price points where we were trading at prior to when China was really in the equation at all. And now that China is in the equation, potentially that's what helps this gap hold a little bit more firm, even if it's not to the amount that people would like to see. China is present, and we're back at those price points we were trading at prior to that. So maybe some silver linings heading into next week's trade, despite the ugly chart. Again, still some downside risk technically, but potentially maybe finding some value if we do trade into that gap. Now, over on the wheat side of things, not a great session there as well, and just been kind of bleeding lower, drifting lower, would probably be a more appropriate term over the last several weeks. Yesterday, it looked like we were going to hold a nice little gain and bounce, and we did, and then we just gave it all back today. The March Chicago contract down 4.25 cents today, settling at 529.25. That was 5.5 cents lower on the week, and the sixth consecutive week of losses. So not a great look for wheat. Still kind of trying to hold that gap from October 27th, similar to beans. We actually did test it and filled it, but we're still holding that as support. A failure there, and you're potentially looking at potentially contract lows, which were set back in October, 508.5. There's definitely some error under the chart if we cannot hold these lower ends of support near 528 for that March Chicago contract. All right, now we'll jump over to the livestock side of things. It was a little bit of a mixed bag in the cattle and hog markets. Cattle lower, hogs higher. We'll start with the February live cattle futures pulled up here. A nice little pullback, tested and held the 100-day moving average as resistance in yesterday's trade, which you can see here is the top end of this range and really just kind of shy of that gap from October 27th. As you can see, the October 27th gap is a common theme in a lot of these commodity markets. So we got back there and just really couldn't get much more going. And we were on AgriTalk yesterday afternoon, RFD TV earlier in the week, talking about if you've got physical risk, we think this is a spot to play defense against, especially if you were had that physical risk during this whole downfall and didn't really have any protection on. Well, here's your chance to maybe look at getting some protection on. If you need help and figuring out what strategies might be most suitable for you on that front, don't hesitate to reach out. Zooming out, I continue to think that we're settling into more of a normal trading environment where we can see a range start to develop. We haven't seen much of a range develop today. I mean, over this week's trade, it's certainly a lot quieter, though. You're starting to see the 14-day average true range contract for live cattle and feeder cattle. It's working lower. And you look at the CME CVOL index, it was down again today, the lowest level since November 3rd. So you're seeing the range is narrow and the volatility come in, and I think that potentially is what kind of kicks us into that range-bound trade to round out the year, which, again, I think is probably keeps the upside somewhat limited in the near term, which makes me be a little bit more proactive in looking for hedge protection if you have that physical risk. Same can be said with that feeder cattle market. We got about halfway in that gap in the January contract yesterday, that gap from, you guessed it, October 27th. The high end of that gap near 348. We got about 345 in yesterday's trade and couldn't get much more going. We pulled back today, giving back basically all of yesterday's gains, which puts us basically unchanged for the week. I think we were up 5 cents on the week. So that's what we're talking about, that volatility coming in, the narrow ranges, the range is getting more narrow, and the volatility coming out. So I think the upside, maybe a little bit more in the feeder cattle market left, but I think if you're one that needs some downside protection, this would certainly be a spot to be a little bit more proactive on that front. Now, wrapping things up with the lean hog market, this is one market that we've been pretty optimistic on over the last several weeks. Rounded bottom. Had a lot of headlines with regards to the African swine fever. If you squint, you can see an inverse head and shoulders here. Left shoulder, head, right shoulder, cup and handle. And the breakout earlier in this week's trade above this 87.35 area. And then above the 100-day moving average yesterday, which continued to keep that momentum alive in today's trade. We're probably getting to a point where maybe a little bit overextended in the near term, but I think this is one of those markets where even if we do pull back, I think potentially those pullbacks will be buying opportunities. So the path of least resistance, in my opinion, continues to be higher highs and higher lows. So pullbacks, potentially buying opportunities, especially if those headline risks continue to pop up every now and again with regards to African swine fever out of Spain. So that's what we're looking at. If you've got any questions at all, don't hesitate to reach out. These charts are on our Blue Line Edge trading platform. So if you have any interest at all, testing out a demo or trading from this platform, let us know. We've got a great mobile platform that is very user-friendly and easy to set up on that front as well. We've got the daily commentary. If you haven't signed up for that, head over to bluelinefutures.com. Had to get those last couple plugs in. With that, we'll call it a week. Have a great, safe weekend, everybody. And remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.